Hey, what's up, guys? This is Sam, and I'll be doing the free video for March 18th, 2022. So, pretty big week is in the books. It was Fed, it was Trip Witch, and I don't think that the fireworks are over quite just yet. This week was kind of a seek and destroy mission for anyone who had hedges and puts. We did talk about it in the notes that we have, so you guys haven't had a chance to see this, so I'm going to just briefly cover them with you. But these are some notes that we do all every Sunday before the market opens. We put these out last Sunday or this Sunday before the market opened, and just want to read the first paragraph and then the last paragraph. And if you want to zoom in and pause the video and read the whole thing, feel free. But trading comes down to three things: technicals, timing, and positioning. Going into this week, the bears have control of the technicals, the charts. However, the positioning of the market being so long puts, protection, and hedges implies the risk may be mean reversion to the upside. The timing here is very difficult because the charts say stick with the short, and there's always a but the positioning and calendar of quarterly expirations say expect the risk in the near term to the upside based only on positioning by traders and sentiment. So if you're new to trading or newer, it can seem kind of counterintuitive, but it kind of works like this. If everybody's already sold, if everybody's already bought puts, if everybody's already hedged up going into the event, there's really no one left to sell or buy more puts or hedge up, right? They already had their protection. And what the market can tend to do sometimes in those spots where everybody's on one side of the boat is it flips the boat over, right? And it forces everyone who has puts out of those positions. And then as they start to cover, it's forced buying, right? So you cover your put, which forces me to have to cover my put, which forces person C to have to cover their put. And that's forced buying all the way up. And that's certainly what we saw this week. But I do want to round it out here because one thing that I think is kind of interesting and also counterintuitive, especially if you're somewhat newer, is the fuel for this gigantic move up this week was all of those puts and all of that protection getting sold back into the market, which is creating forced buying of the stocks, right? You buy a put, stocks that pushes the price down just a little bit. But if you're forced to cover the put, it pushes price up a little bit. And when you have a metric ton of puts being covered all at once because the market's going higher, it creates this kind of feeding frenzy to the upside. It's a short squeeze slash gamma squeeze slash all of the squeezes. So I invite you to pause the video and read the notes here, but I'm just going to read the last part to you. The one thing missing for the bears, right, not the bulls, missing for the bears to make the next leg lower is counterintuitive. But the bears needed a swoon of hope to come to the market that lasts 1 to 2 weeks, which clears out the over positioning slash hedging on the put side so that the selling can then continue, right? So this week we saw the puts get nuked. And one thing that I kind of want to put in your dish so that you can check this out on your own and make yourself a better trader, look at the quarterly expiration for March. So pull up your TOS, pull up your Tastyworks, pull up your SPX, go to the March 31st series, the expiration. That's the quarterly expiration. And look at how much open interest is still at the 4,500. 4510, for whatever reason, has a crap ton of open interest. 4520 on the put side, right? And these are all people that if the markets keep going higher in the next 2 weeks, they're going to be forced to cover because they have profits or they just don't want to take the loss. And the markets will typically tend to seek and destroy these puts going into quarterly expiration, right? So that's kind of a little bit of an intro to what we're going to cover here. So the idea, at least that I'm working with going into the end of the month, quarterly expiration, March 31st, is that there is potentially quite a decent amount of potential that we continue to see a little bit higher in the markets because of this feedback cycle of folks having bought too many puts and all of those puts needing to be pushed to zero before the end of the month. So on SPY here, I'm going to show you the chart, but I just want to give you two levels on SPY that you need to be aware of. 45 and a half, 445 and a half, 453 and a half. Be very aware of those two levels. Right now we did close just nominally below 45 and a half. We likely are able to punch through that at some point next week. And then if we can get above 43.5, then we have a little bit of a game changer, right? A little bit of game changer happens at that level. But you can see over here that you do have your first weekly buy signal, and this is going to look crazy, but I'll zoom out and show you. You have your first weekly buy signal since COVID started. So I have to take it serious because look what happened after that, right? Now, do I think that we go back into that? No. Last week I had a very provocative video, and some of you certainly bit on the provocation, but it was titled Spy 340. My mind hasn't changed on that, guys. Keep in mind we're at Spy 420 or whatever we were at. Give me some time on that trade. Give me at least until October to take it down 20-30% on the index. But I still think that's where we're going. But trading is all about timing. And right here, right now, the timing and the positioning, I should say, the timing and the positioning says the market wants higher, so it can seek and destroy those puts that are set to expire for the quarterly expiration. Very big open interest there. One more point I'll make for you is the seasonality. The seasonality is the worst at the time period that we're in right now. Is the bottom of the seasonality most of the time. And then as you go into April, it actually is the best seasonality for the beginning part of the year. So we're about to hit that good seasonality. We have deeply oversold markets on longer term charts. We have a deeply unbalanced set of put buyers, if you will, with further out expirations quarterly and beyond. And all of this creates a kind of potent recipe for a little bit of continuation at the very least until quarterly expiration. So I just wanted to cover that here with SPY real quick. I do want to show you VIX, but I'm not going to have time. I don't want to have too long of a video with you guys today. I want to keep it nice and brisk for the YouTube so that you can go and jump to a cat video right after this. So let me briefly show you just a couple of things that I'm looking at. One that I'm still looking at here is EOG. So pretty clean setup here. One of the better looking energy names. Still I'm going to be focusing here. Complete alignment everywhere. Daily squeeze, daily trend. Holding up extremely well considering this wasn't really the week for energy specifically. Another one that came up in session was MPC. Now this one's a little bit more on the launch pad. And I think this one's going to be maybe the one that I go with here. It's not as technically strong as EOG, but it's more on the launch pad, right? With EOG, it's just a touch extended. This one is not, and this one seems pretty damn ready to go to me, right? You have a very kind of nice triangle here that's building in the context. So you have a compression phase, this is a compression pattern, but you have a compression pattern in the context of a daily and weekly trend. The probability says that if you go into consolidation in trend, you bust out in the direction of trend. So there's that. One that's a little bit off the beaten path, and I'm really getting some FOMO here on this one because I love this signal. I won't have time to fully break it down, but I'll drop something in your dish here by the end of the video because we're actually going to be opening up our training room to you guys all of next week. Completely free, right? So even if you're not a member, you can stop by the YouTube channel, which you're already on. Make sure you subscribe, by the way, that way you can be notified, or the Facebook page, right? Whatever you prefer. And we'll be streaming the training room from the Simpler Options training room. We'll be streaming that live pretty much every day, Monday through Friday, all next week. So you'll have a chance to pop in there and kind of see how we're trading and just kind of see how things, how the room goes. So I'll come back to that here in just a second. And I'll answer more questions about this setup in that session just for you guys because I won't have time to cover it in detail here. But space, I think, is really interesting because you see how price is going down, but the indicator, look at the indicator over here. You see how the indicator's gone up? That's a gigantic divergence, right? It's a positive momentum divergence, number one. Number two, you see how the green line has gotten above the red, even though price action has gone sideways to down, right? Why is a trending momentum indicator improving in the context of bad price action? And the only answer is, at least conventionally, based on the patterns, that this coil that's building up is actually a very bullish coil. So going into next week, I'm looking for 10 here on space, followed by 11. If space is able to get above 11, it's a game changer. At that point, you just start chewing up dollars to the upside. You'd go to 12, and then you target the 100-day right here, right around 12.5. So there's a lot of stocks that look like space. It is not unique. Twitter has the same pattern. Pinterest, Zoom, TDoc, all of the stuff that has a daily structure that looks like this. Square, PayPal. If it looks like this, chances are it has some variation of this setup. And it basically tells me that there's going to be a continuation of the short squeeze going into the quarterly expiration. So I gave you 2 picks that I think are pretty solid in terms of just good structure that I think you can repeat over and over again, MPC, EOG, and then one that's a little bit more speculative, but speculative with the right tone and the right setup to justify the risk. And then just one last one here, kind of that I'm going to be watching next week is UNP. The setups here, the railroads here actually have pretty decent setups across the board, and UNP, in my opinion, had the best setup. So a couple of picks for you there, but really the main takeaway from this is the quarterly expiration coming up in March, and then the positioning of traders going into that, potentially kind of serving as a fuel to create a further squeeze into that OPEX closer to the 4,500 level on SPX. And if that happens, it should push it should take all boats higher. So one last point here before you jump somewhere else to the YouTube. Again, we are going to be opening up the training room this upcoming week, Monday through Friday. So you'll have a variety of different presenters, myself included, and it's completely free, right? So if you're not already a member, you don't even have to sign up. Just go check it out. It'll be right here where you already are all day. Or if you prefer, it'll be on Facebook. And come check us out. If you like what you see, stick around. And if you don't like what you see, well, it was free. So it's just the right price to at least come and sample the simpler community. So we hope to see you there. If you have any questions, drop them down in the comments. We'll try to get to them. And aside from that, guys, it's been a long video. Thanks for sticking with it. I threw a lot of information your way, so ask us questions if you have any. And aside from that, go ahead and leave us a like there before you go somewhere else. Leave us a subscribe. It helps us with the algorithm. And I think last I checked, I think it's pretty free to do that as well. So help us out with that. And hopefully you enjoyed the video. All right, guys. See ya next Friday for the next free video. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video. And before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.